Nino Tronchetti Provera is the founder of sustainable investment firm Ambienta. Thank you so much for joining us again. Great to see you.
Thank you very much for having me again.
Let me just get to the macro first and what you're seeing, because there are significant moving parts around tariffs, talk that we've gone from a very strong US story now to concerns around recession, and of course a big fiscal package in Europe. In the wash, how is this impacting the outlook as you see it?
As far as environmental trends are concerned, I am not, because the key trends are staying. People shifting from chemical to natural ingredient and food and beverage, shifting from old technologies to new LED technologies for lighting, shifting from gas boilers to heat pumps and the like. Of course, I'm worried, like every single economic actor, on the overall economic trends. I think we are going to have a slowdown of the economy as a result of the uncertainty, but I'm sure environmental champions will continue to outperform the rest of the pack.
We were looking at some of the big publicly listed companies this week at CNBC, and some of the announcements suggest that, look, some of the targets are being rowed back. Tractor Supply Company withdrew its carbon emissions goals, BP and Shell reducing their targets, Alphabet, Meta in the tech industry also altering some of that carbon neutrality. Nike had laid off dozens of sustainability managers. I mean, I could just keep on going on the list of changes around ESG. Does it have consequences for the private market? Do you see them follow what the public companies are doing on ESG?
Again, private markets are driven by long-term trends. Okay, you have the privilege of investing, and you can. The jury is not out after a week or after a quarter. The jury is out in a few years. And so, if you look at companies that are outgrowing their peers by a factor of 3, 4, 5 times, because this is what we are discussing here. The last 5 years, if I look at the portfolio that we are overseeing, growth rate have been 3.5 times the rest of the economy. So these companies are growing. These things stay. If anything, what's happening out there as the result of the last policies, the new leadership in the US, is that a lot of players have been getting out of the arena. You know, they've been making big commitments 4 or 5 years ago, and in a matter of days, they can kind of cancel those commitments. So you see the same trends back in the companies that you want to invest in, and you have less competition that is actually competing against you on investors' money.
That's an interesting point, because we are hearing and seeing more and more asset managers retreat from their ESG commitments. And ESG, I think many would argue, has peaked as an investment theme, and certainly as a dedicated fund theme. But what are you seeing that others aren't? What makes you double down right now when so many others are pulling back?
No, I know many people are asking me that question, because in fact we are doubling the hires, we are doubling the asset under management, we are investing. Listen, it's 34 years I have been focusing on these trends. And I've seen up and down. Typically the down were related to economic recession. This is probably the first time that the down in the ESG as a flavor of the day is much more related to political flavor and political narrative than to real recession. But again, the trends are there. So the reason we are doubling down is that we actually never felt such a momentum. You have less competition on the deals. You have less competition on fundraising. We raised a lot of money for us, $1.5 billion, in a matter of weeks in the last 9 months. Okay, in probably one of the worst moments in fundraising in private capital in the last few years.
I couldn't agree with you more. The trends are there, and they're not going anywhere. They may be slowing, they may be continuing, and then expanding in at another stage. But just drawing on what both of Karen and Juliana have said as well, there are certain parts of the investment community which are turning their back on it. No doubt about it, and it's shown in the ETF data and elsewhere. But the Chinese aren't. In fact, the Chinese are going gangbusters ahead with a lot of these initiatives, whether it be on solar, whether it be on pumps, whether it be on hydrogen, whether it be on EV, you name it. Is the US and other investors pulling back, creating a vacuum and a gap that will be filled by the Chinese? And if so, Does that make the investment case just that little bit trickier? Because as we've seen with other products over the years, when the Chinese jump in, the cost of the product is challenged on an international basis, and the European and global players, they just can't compete.
No, I think that two or three different facts.
Yeah.
Number one, I haven't seen one single institutional US investor reducing by an inch their sustainability investing. This is my personal experience. 15% of our money comes from the US. If anything, is going to increase. Okay, it's mostly, as you know very well, West Coast and East Coast, but I haven't seen one single sign of reduction. Number two, there is a fantastic chart about market shares in the different environmental technologies, especially related to energy, because this is what most people are focused on, although energy is just a very small piece of the sustainability arena, about the market share of the different continents. And as you were pointing out, that chart looks pretty much all red since many years. Okay, US hasn't really focused on that. Europe has been doing a lot of narrative, a lot of talks, but in reality Europe is not approving a very important law on sustainability matters since years. Nobody is saying it, but last year Europe failed to approve the law on plastic, the law on fertilizers. Europe is a lot of blah, 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 but if you look at facts, things are not happening.
Can we talk about where the dollars or the euros are going at this point? Because there have been big themes around defense and infrastructure clearly, and around renewables. Where is the money landing in companies here?
Infrastructure continues to happen. I think that something that most people are not focusing enough on is if you speak about energy, is the grid. What happened in Spain may be completely unrelated, but there is, in any single country I can think of the West world, there is a major gap between the clearly happening electrification of the economy, and please just don't think about electric cars, which is a small piece of the electrification of the economy, and how those grids they are supposed to carry all that electricity are there. Otherwise, in a lot of different things, valves for tractors reducing the consumption of the tractors, biostimulants that are growing 6 times faster than fertilizers to adapt nature to climate change, heat pumps, electric boilers for industrial application replacing gas boilers. Do you know the electric boilers doubled in the last couple of years in Europe?
Right.
Double. How many things do you know that doubled in the last couple of years?
Well, it used to be payments, but it's not payments anymore, is it? Nino, thank you so much for joining us. I do appreciate your time.